Hello, hello, and welcome to another update on gold. So the new trading week is nearly there, and I'm still tracking here these two pathways. I'm going to zoom out a little bit more for higher prices overall. The main question is: has the wave 4 bottomed already around the 19th to 20th of August, where that red line is positioned around $3,350? Yeah. From there, then we could grind to higher prices, but the next pullback needs to happen for us to be able to identify the structure, because for now we don't really have a pullback up there. The market is holding above the previous high that formed in April. Now, it still is a structure that doesn't quite look right, in my opinion. So I think there is still a high risk that this is simply a B wave rally. Okay. B wave rallies can look impulsive, absolutely. Just be ready. It can still grind a little higher. There should be some strong resistance in the area around $3,706 and $3,750. So it can be a B wave. Again, quick reminder: this might be an A wave down. Then here a complex correction, could even be some kind of a triangle. Bottom line is this would be part of a complex B wave bounce. And there's typically in a B wave more than one way of labeling it. That's not so important how exactly it's labeled. It's important it can be considered a corrective structure, which could easily take the price maybe even a little higher before then a C wave decline follows. That, however, does not need to necessarily take the price below the May low again. Instead, because the B wave does overshoot, the blue zone here needs to be adjusted as well slightly. And it could simply take us to the 100% extension level, for example, which is located at $3,260, which is above the May low. So that's something to consider. But again, there are support levels that would need to be broken for the market to get us into this region down there anyway. So we will talk about these support areas in this video. Let me just try to make that a little bit simpler here. That was the white scenario. Yeah, so that's the scenario which is bullish, but can involve a sharp pullback. Yeah. Remember, the Fed interest rate decision is close. There can be some volatility and everything. So please remember that as well. But mainly, it could be a B wave rally, but the momentum is still up, right? We haven't even broken below a previous swing low. We haven't even broken below the first Fibonacci support zone, which is between $3,530 and $3,570. So the pressure still appears to be up. Yeah. So for now, I think it's important to recognize that whether this is a B wave or something more bullish, like in the orange count, we could have already bottomed in this wave 4. Yeah. So again, we're bullish overall. The question is just, is this wave 4 still unfolding? And without seeing the next pullback, you can't really tell. What I'm saying is my B wave senses tell me this could be a B wave. Now, if we see a break below 3,530 maybe next week or so, that's, by the way, the upper support area. Without a break below that level, there is no sign anyway that a top is in. So if we get a break below, then this would be the next support zone to watch, $3,415 to $3,500. So if the pullback is nice and corrective, slow, then it might rather be a wave 2. Then we have a 1-2 pattern, and this would be the first key support zone to watch. Now, okay, there's this micro support area, but again, without a break below this one and this previous swing low there from the 2nd of September, around 3,530, there is no sign of a top anyway. Okay, so yeah, it's going to be this 3,415 to 3,500 level that will tell us the difference, or area that will help us to distinguish between the white scenario and the orange scenario. I'll keep you updated about that. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the membership. There's a stocks membership where we cover gold, silver as well, including obviously the S&P, the Nasdaq, and many more stocks. Thanks so much. Bye-bye.